Your cursor hovers over the sell button as the 5-second chart snaps from a quiet doji to a violent green cannon. Level 2 lights up. Time and sales spits a machine gun of prints. Somewhere, a headline pings upgrade, guidance, rumor, something your ears barely register it. Your scalper brain sees one thing: momentum. The spread widens. Your stop-loss finger hesitates. Your heart rate doubles. You watch the candle stretch. A perfect micro-flag forms under VideoApp, and suddenly all the entries you passed on this morning collapse into this one moment. You convince yourself, if I don't take this now, I'll miss the move. You hit market, slippage, instant regret. The wick punches through your fill, blips one tick in profit, teases your dopamine, then snaps under VWAP as fast as it arrived. Your platform lags half a breath. Your exit turns into a chase. You either take a scratch that wasn't part of the plan, or you freeze and widen the stop. Just this once. The spike that felt like opportunity becomes a trapdoor, and the trapdoor is always where your belief that news equals direction meets a liquidity vacuum. Here's the part almost no one admits. The candlestick that made you click was not information. It was sensation. You didn't process order flow, you mirrored it. Mirror neurons copied other traders' aggression. Adrenaline promised speed would overcome uncertainty. Cortisol whispered, "Get out, get out," the second the wick reversed. That 5-second burst rewired your risk rules in 3 seconds. And by the time you're flat, the market prints the real signal in silence after your cortisol spike, after your serotonin dip, after you've sworn you'll be disciplined on the next setup. Quick reminder while we're inside the heat, this is education, not financial advice. Most traders lose money. Past patterns don't guarantee future outcomes. Risk management is survival. You're not trying to outguess the news, you're trying to out-execute your own nervous system. Why do FOMO, candlesticks and news spikes hijack scalps? Start with pattern hunger. Your brain evolved to find meaning in noise. On micro timeframes, 5-second, 15-second, even 1-minute noise looks like narrative. A sudden volume burst under a headline becomes, "Institutions are taking it." But short-term liquidity events are often inventory grabs. Market makers widen spreads, vacuum resting liquidity, then mean revert to the last area of acceptance. When you're zoomed in, you hallucinate patterns. The tiny bull flag beneath resistance looks textbook, but it's perched on the wrong side of the auction. That's chart pattern hallucination, seeing certainty where there's only conditional probability. Now layer in belief conflicts. Part of you knows your plan. Wait for a VWAP reclaim with confirmation from order flow and a tight, predefined stop. Another part clings to the story. News changed everything. Those parts collide right at the entry. The conflict doesn't politely resolve, it flips your execution. You hesitate on your A setup, then chase the B setup because it feels like certainty. The paradox shows up immediately. The trades that feel most comfortable, big green candles, loud headlines, are usually the worst reward to risk for scalps. The best trades feel wrong. They trigger when price is quiet and your ego wants drama. Consider the neurochemistry of a green spike. The moment your unrealized P&L flashes positive, dopamine surges. Dopamine isn't happiness, it's anticipation. It urges continuation. Add size, widen the stop to let it breathe. Hold through the first pullback without reference to plan. Then volatility jolts adrenaline, which narrows attention to the tick stream while blinding you to context. Where's support resistance? Where's the last failed auction? What's the higher time frame bias? When the wick snaps and your P&L goes red, cortisol spikes. Cortisol isn't a teacher, it's a siren. It pushes you to exit at the worst location or to remove the stop entirely so it can't hurt you. After a few of these, serotonin depletes. You feel deflated. Your risk perception distorts and you revenge trade to feel normal again. More analysis doesn't save you. It thickens the fog. More screens don't clarify. They multiply the noise. Tighter stops don't protect you. They place your pain right where algorithms probe. Perfect setups fail most often when your belief in perfection is the strongest. Let's map the costly pattern. It begins with pre-market scrolling. You're on TradingView, filtering top gainers, cross-checking news feeds, drawing neat levels on the 1-minute and 5-minute. You skip building a risk plan per ticker. You skip defining where the auction is balanced. The open rings, you watch two clean ace setups pass because you're trying to feel more certain. Then a headline, surprise guidance, sector sympathy, or a rumour on X. Price launches just beneath a morning resistance you drew and ignored. Level 2 shows stacked bids chasing. Your brain hears demand. Your entry is a market order inside a widening spread. Your stop is mental for now, because it's moving too fast to type. The candle wicks up 2 ticks and prints your dream P&L for half a second. You don't take it because greed extends exits. It's just getting started. The wick reverses, your stop is still imaginary, you freeze, then you move it because stop-loss removal syndrome. Says pain delayed is pain denied. Drawdown begins. Your next trade is an overtrading compulsion. You hit the opposite direction because the loss hurt, and the tape owes you. The day devolves into tiny high-frequency coin flips with poor locations, each taught by the last candle rather than the plan. End result: commissions up, P&L down, and a performance journal that reads like deja vu. Meet Marcus, the scalp master, on a Tuesday during earnings season. 3 27-inch screens, a vertical monitor for the news tape, level 2 and time and sales pinned, footprint chart and volume profile on a 15-second and 1 minute. Trading view on the side for context. He makes 50 to 100 trades a day at peak, but not by chasing. He inhales and exhales order flow. Each trade is one breath. He starts at 7:30 a.m. his time, but he doesn't touch a hotkey for 90 minutes. He builds a hold map for each ticker on his list. Pre-market balance areas, overnight highs, lows, VWAP bands, initial balance range, and 2 lines labelled Pain 1 and Pain 2. Obvious stop pools, where Wicks likes to collect a liquidity. He writes in a notebook not to be fancy, but to slow his thinking. Bias. Neutral up if above pre-market value. Trade only VWAP reclaims with delta shift. Max 3 attempts per idea. Hard stop is equal to 0.5 R, beyond opposing value edge. First scale at 1 R. No add unless pullback holds above entry footprint. He also has a no-go list in red. No chasing news spikes. No first-minute entries. No mental stops. No trading during platform lag. When the bell rings and a headline drops, Marcus leans back. He watches the first burst print into an overhead liquidity shelf on the order book. Time and sales shows big prints, but delta diverges. Absorption sits on the ask. The footprint reveals single price excess and then stall. His rule says, wait for reclaim and retest, then entry with stop defined by structure, not by hope. A spike rips through VWAP. Most scalpers hit it. Marcus doesn't. He's not immune to FOMO, his dopamine surges too, but he has a ritual. 3 breaths, palm flat on the desk, eyes to the hold map. He checks. Are we above the morning shelf or did we just tag it and reject? Is the pullback into VWAP showing selling that fails to push value lower? He wants the uncomfortable trade, the small green candle after the violent red pullback into held value, with delta flipping positive and the spread narrowing. He clicks a limit at the retest instead of chasing into a widening spread. Hard stop, 2 ticks below the profile edge typed, placed, not imagined. He scales 1/3 at 1 R to pay himself, not because he feels it, but because his statistics say the first target hits more often than the second. When the wick fakes higher and snaps back, he's paid. If it fails, he's already reduced size, and he knows the exact price of being wrong. The difference isn't that he knows the future. It's that he judges the auction, not the headline, and he lets the market define risk for him. How do you rewire your scalper brain so FOMO candles and news spikes stop hijacking your day? Start before the bell. Build a pre-market auction card for each ticker. 1. Higher time frame bias in 1 sentence. 2. Pre-market value area and VWAP. 3. 2 trade ideas with if-then logic. 4. Specific entry triggers using order flow, e.g. delta flip plus footprint imbalance at value edge. 5. Hard stop location tied to structure. 6. Scale plan, first at 1 R, second at 2 R, or at opposing value edge. 7. Max loss per ticker and per session. Write it by hand. Writing slows dopamine and makes belief conflicts visible. Add a 90-second nervous system warm-up. Box breathing, then one slow scroll through your plan aloud. Tell your brain the story before the market does. Next, install guardrails for the open. No entries in the first 60 seconds. No market orders on spikes. No stop removal ever. No adding to a loser. Put each as a one-line alert that literally pops on your platform. Tie your stops to structure, not to cash pain. Beneath the last value ledge, beyond the prior imbalance, never a round number that feels safe. Use bracket orders so the exit exists the moment you enter. This prevents the "it's moving too fast" lie. Replace tight stops with correct stops plus appropriate size. If your stop belongs 5 ticks away, but you want a 2-tick loss, trade half size or skip. Tighter stops near obvious liquidity magnets are how algos feed. Now address the bias layer. Entry hesitation paralysis. Solve it by predefining the single micro trigger you take today. For instance, VWAP reclaim plus positive delta plus 1 minute close above value edge. Nothing else. Exit greed extension. Solve it by automatic first scale at 1 hour. Your job is not to maximize the first push, it's to build cushion for the second. Stop loss removal syndrome. Lock your platform to disallow stop modifications. If that feels draconian, good, the market is an unstructured environment. You supply the structure. Revenge trading loops. Install a walkaway timer that triggers after any 1.5 hour loss. 3 minutes away from screens, eyes off the tape, write 2 lines. What was the plan? And where did the auction change? Overtrading compulsion. Use a 2-gate rule. Each new trade must pass gate 1, context, above below value, trend, Josh, rotation. And gate 2, signal, your 1 trigger. Fail either gate, no trade. Chart pattern hallucination. Zoom out every 10 minutes to the 5-minute and 15-minute to re-anchor the auction. If the spike printed into a ceiling you drew at 8:45, you don't get to forget it at 9:45. Tackle neurochemistry with ritual. Before any click, breathe in 4, hold 4, out 6. Name the sensation out loud. This is adrenaline, it's not information. During green P&L, read your scale rules, not your dreams. During red P&L, read your stop rules, not your fears. If a headline hits, ask 3 auction questions before acting. Where is price relative to VWAP? Did volume expand into new value, or was that just a stop run? Did the footprint show acceptance, or only excess? Mirror neurons calm when you switch from others are buying to the auction is accepting, he rejecting. Finally, make discipline physically easy. Program hotkeys that only place your pre-sized bracket at your preferred entries. If your tools fight your plan, your biology will win. Journal the only statistics that retrain beliefs. Time of entry relative to the open. Distance of entry from nearest value edge. Slippage on market versus limit. Outcome versus whether you scaled at 1R. Outcome versus whether stop was at structure or arbitrary. After 10 sessions, your brain will stop believing the story that news candles pay. It will believe numbers. And that's the belief you want. Probability over narrative. Remember, past patterns don't guarantee the future, but your own patterns are trying to. Picture your transformation on a random Thursday with 2 headlines in the first 5 minutes. The first spike rips through morning resistance. You watch it, label it, and do nothing. It feels wrong to wait. That's how you know you're right. The pullback prints into VWAP, delta flips. The footprint shows buyers defending the same 2 prices 3 times. You click a limit at the retest, bracket attached, stop placed 2 ticks below the ledge. The trade breathes, then pushes. First scale hits small, mechanical, boring. The second scale approaches the opposing shelf. You see sellers stack. You don't dream of a breakout. You take it because your card said so. The second headline drops. Price wicks into your pain 1 zone. You are already flat, already waiting. A minute later, the reclaim appears. You take the second entry, smaller because your daily loss, max and win-max rules keep you stable. There's no revenge trade because there was no betrayal. There was simply an auction with rules you respected. Most traders lose money in these moments not because they can't read a chart, but because they let a candle tell them who they are. That's the paradox at the center of scalping. The more you seek certainty, The more you give away risk, reward, the more you chase motion, the more you miss location. The more screens you open, the less you see. Your edge isn't the news, the squawk, or the shiny wick. Your edge is a boring sentence written before the bell, a bracket that exists before you feel anything, and a habit of asking, where is value? Before you ask, how do I feel? When you trade that way, headlines stop being orders. They become tests you pass by not moving. This isn't financial advice, this is survival advice. Define risk, respect risk, and let risk define the trade. The market will still sting, the wick will still lie, the platform will still lag sometimes. But your plan will be stronger than your pulse. And on the days when the spike is real and value shifts for good, you'll be on board not because you chased, but because you were the only one calm enough to buy the quiet candle that no one else trusted.